There we are. So now it should be starting. It's starting on blockchain education, starting on my YouTube. So we're streaming. I posted it over in the in the group chat. So
Okay.
and then anyway, so yeah, this is Friday morning NASDAQ Futures trading with Robert of Blockchain Education and Craig of just Craig. Hmm. So yeah.
Yeah, so we were just talking about reward versus risk, and how marketing in and marketing out of orders really promotes over trading, and it's not really sustainable. I mean, yeah, sure, you could sit there and, watch the market like a hawk all day and mark it in and then mark it out. But a couple things are going to happen is, first of all, if you have no stop loss, you're basically a sitting duck for opposing orders. Secondly, you could just get stomped, because if you don't have a stop loss and you don't have a take profit, it also promotes you to bail out of trades. And that's a really good way to consistently lose money, because almost every trade you get into in the NASDAQ, you're going to have to take at least a little bit of heat. I would say 95 times out of 100, you're going to take a little heat. Might be only a $50 or $100 drawdown or $40, but you're going to take some heat, because when you get into any asset, the price isn't just going to go up and up and up. Usually not, anyway. There are anomalies, but it was a total game changer for me. I started using Top Step X as a platform. They had some promo deals. I got in early, and all you do is you can mark it into an order, and then you just push on where you got in, that little rectangle, pull it down, there's your stop loss, and then you go back to your entry, push it up, there's your take profit. And you basically just use the left mouse button, hold it down, and then let it go. And you set it and forget it. So if you have a proper, what I call a cheap trade, means you don't have much downside, so there's not you got a really reasonable stop loss, but you don't stand to lose a lot if the trade goes south. You can set it and forget it. Go grocery shopping, whatever, come back, oh, you won your trade. Or you got stopped out, no big deal. The way you set a stop loss is, number one, where is the price going to break support? If it makes a lower low, you want to get out, because it could end up in, going even lower yet. And it could have resulted in more heavier losses. So what I've been doing is moving average crosses. So a slow moving average and a fast moving average. So the faster moving average crosses up and over the slower moving average as my bull signal. Depending on the strength and liquidity and volume of the market, I can decide whether it's 2 minute, 3 minute, 4 minute. I basically just gave away the secret sauce right there, but that's one of the methods that's really strong in getting a good long entry, especially after you have a discernible, dump. You can basically just wait for it, and you get in after they do the liquidity sweep. Now, what is a liquidity sweep? I'm going to go ahead and share my screen. Yeah. I think do I hit present?
Yeah, present.
Okay. Then we're going to do share screen. And then we're going to do, let's see here. We're going to do this one here. All right. So if we're looking at this chart, this is the NASDAQ 100. So we just had a pretty considerable drop. Let's look at the 5 minute here. Okay, so here's the dump right here. It happened at, started at like just after midnight. My time, it goes all the way down, and here it's trying to bottom out. And this is a good example right here of a liquidity sweep. So you have these bars. That's a reversal right there. The price goes up, and it literally sweeps all that liquidity away from all those longs. The price goes down. The bears take over just temporarily, and they sweep all that liquidity and either do force outs, stop losses hit, because your stop loss would be below these two, blue bars, obviously. It's like, okay, well, if it makes a lower low, I want to get out here. Stop losses probably got hit, and then the bulls take over and push the price up. Now, this is only temporary. You can see these two moving averages cross. That would be the 5-minute entry. But look what happens after that. Another liquidity sweep. Boom. Lower lows. And then it goes up. So when it's done this twice now, I think this is the place where it goes up. Now, these are 5-minute candles, so they obviously mean more than, say, 1 or 2-minute candles. Let me show it like this. It's easier to see. Yeah. So this could be a very interesting day. It could be a good long. Now, the approach would be, well, where do you get into this long? I would use a short candle, like a 1 minute or possibly even 30-second to get in. Now, the 30-second actually looks pretty good. The Trendillo is starting to turn red on the 30-second. Stochastic is low and starting to sweep up just barely. Still have red on the squeeze momentum, so it could go lower, probably will. This is a mini support level in here, right there.
Oh, yeah. Yeah, you can see that.
I mean, keep in mind, this is only 30 seconds. I could scalp this here and make money, but we are pre-market still. The New York Open doesn't open for another 38 minutes. So the volume is a little bit weak in comparison to after New York Open. Then the floor opens at the New York Stock Exchange. Volume pours in. They usually start taking a bid, and the price goes up. So when the volume is low, liquidity is a bit thin, the price can move up easier or it can move down easier. So the price can get pushed because low liquidity means all these little price points are not really filled up with orders, or the orders are small in those areas. The smaller the orders within each price area, the lower the liquidity, and the more easily they can move the price. So that's kind of a good thing to wait for New York Open. Although if you're a little bit longer, if you can handle slow markets, you can certainly trade, the London Open, which is just about midnight my time, is where things start happening. But I'm not really into getting up at midnight because I get up at 4 or 5 o'clock in the morning. So
yeah,
it just wouldn't work too well for me. So as you can see, the price acted like it was going to go up. It wasn't quite ready, needs to go lower. And if you're ever trading, say, 30-second candles, all you have to do is just say, well, is this really the bottom? Go to 1-minute candles, and then you see, oh, well, it's not really the bottom. But the 1 minute hasn't even gone to the bottom of the Trendillo threshold. The stochastic isn't really doing what it needs to do. And 2 minutes says it's definitely going to go lower.
Yeah.
So this support level is going to be probably invalidated very soon. And the price is probably going to go down into this area. Now there is a diagonal trend line, which comes from one of the indicators I use called Trend Lines with Breaks by Lux Algo. It's free, and it is valuable because not only do you get I get my diagonal, I get my horizontal support and resistance areas from another indicator, but this trend line with breaks indicator shows the patterns that you don't have to draw yourself, and they're usually triangle patterns. So they're all diagonal lines. So when you get a break, see this red dotted line here? This
Yeah.
is actually an upward channel floor. So as long as it doesn't break that red line, you're good to
Wow.
actually go a little bit higher and
And
make a
that's
higher
trend lines with breaks. Okay.
trend lines with breaks by Luxalgo. Highly recommend it. Add it to your arsenal. It's a good program.
Wow. I like that. And so it just figures out channels then.
Yeah, it just figures out diagonal channels instead of the horizontal channels or horizontal breakouts.
That's cool because that really that's awesome. I'll have to install that one and check it out. Because yeah, that's just I like it.
Yeah, the
Mm.
easiest way for people that aren't really familiar with diagonal channels is if it was to really break this red line channel floor, break below it, then you just lost your diagonal support. You lost your upward channel floor. So it's probably not going to do that, I would guess, just because it's been doing quite well maintaining this since the bottom.
Oh
So,
yeah.
so
Yeah. And it's kind of all about getting that unless a person is shorting, if you're longing, it's all about finding that confirmed reversal. So, it always looks like it's at the bottom, but you have to look at different time frames and look for that channel, that like diagonal channel, or uh, uh, location and your stochastic and your whichever indicators you're using and wait for that confirmed uptrend, and that could be the challenge, because it always every dip looks like the low, but we really have to confirm that, and you do a lot better when you trade that confirmed uptrend. When the squeeze indicator turns green, stochastics moving up. If you like the MACD, like when the MACD crosses the signal line. I mean, there's so many indicators. So whatever a person likes, but always wait for that confirmed uptrend. You'll win 9 times out of 10.
yeah, you're absolutely right, Craig. One of my biggest obstacles through my trading experience, through my learning curve, was just learning not to FOMO.
Mm-hmm.
And it's hard to do for most people because you have to keep telling yourself over and over again, don't let any emotion take over. Greed, impatience, fear, all those things are huge detractors from your trading.
Yeah.
If you're getting into a trade and you let fear take over and you're scared you're going to lose money or lose points or whatever, it's just going to mess you up. You have to keep telling yourself like a mantra, trade without emotion. These are just numbers. They don't matter. Just pretend like you're trying to get points in a video game. Now, that actually sounds funny, but it works. Because if you're not thinking about things in monetary expression, you're not worried about money. So
Yeah.
it's no big deal. It's like you're going to win this little video game. Isn't life just like a video game already? So it kind of is.
Yeah.
It's kind of just don't worry about money, but make good decisions because you want to get those points. So
Yeah.
that's how I've started to force myself to trade with that type of mindset. And when you win, another thing is when you win or lose, don't get all excited. Don't throw a bunch of emotion on it. I mean, it's okay to be happy when you win, but just keep it at bay because if you if you're too happy about winning, it's just gonna do stuff in your brain that probably shouldn't be happening, like make you sad when you lose or make you mad at yourself. Why did I do that? I didn't listen. Well, just listen next time And when you make a decision on a trade, your first decision is almost always going to be your best, 99% of the time, because humans have a intuition, and they don't tend to listen to it. They let their emotion overrule their initial intuition. When that happens, you usually screw up your trade.
Yeah.
When you do it through intuition and say, I just know the price is going to go to this area, just follow it, because it's almost like you're halfway into meditation if you just do it subconsciously. It's like your brain knows what to do. Don't
Yeah.
change it later because of fear, greed, impatience, or any other reason, unless it's technical.
Yeah.
But I usually just don't change it, because if I change it, I found that 9 times out of 10 when I change my decision and move my stop loss or take more profit, then I'm wrong. I was right the first time.
Yeah.
So
Yeah, you're right. Even if you do hit the stop, you were right. Even if you do hit the stop loss, really, it's like let the take profit and stop loss be your decisions.
yeah,
Yeah.
you've already decided you're going to lose that much. If the price goes down and maybe goes just a little bit below support, you're out. So maybe that's $200, depending on your account. Maybe that's 500. Maybe it's 50. But if you try to get in at one of these bottoms here, and you got a stop loss that's, say, here, well, that's what they call a cheap trade. You're not going to hardly lose anything, very little, but your upside is going to be potentially huge. So you
Yeah.
probably have like a 8-to-1 or a 10-to-1 reward versus risk ratio, which is important, of course. I could talk about that all day, but there's a lot of other things that we can discuss. So anyway, I mostly trade the NASDAQ as far as traditional futures. NASDAQ is a index of 100 different stocks. And the biggest influencers on the NASDAQ are NVIDIA, Apple, and Microsoft, as far as volume, market cap, and all that sort of thing. So those are good ones to watch when you are trading the NASDAQ. It's a very volatile moving instrument. Pretty fast moving. I call it the mother of all trades.
Mm.
Anyway, do you have anything you wanted to comment about
Oh,
trading these types of things?
Wow, I'm probably a little quiet this morning.
It's okay. It's early.
Yeah. Well, actually, as we're looking at the market open, as that approaches, we can see that NASDAQ might, we're trading pretty small time frames here, of course, but it does look like it may have a little bit of down before up, and we're kind of waiting for that confirmed uptrend. You can see the indicators, and you're also using one called Trendlio, I think it's called
Trendillo?
Trendillo. I think that's free on that. I think that's out there on TradingView. I think.
Yeah, it's also free.
Yeah, and that's Trendio, and that one's quite. I've only just started using that one. That one's a little new to me still. But how does that one like? How does that
Well,
one work?
it's really super simple. So the Trendillo, once it turns red, see you have an upper threshold, lower threshold. Once it turns red, you basically have entered into a downtrend, and that means it has downtrend momentum. So it's not only a momentum detector, but a directional detector. So what I've discovered with the Trendillo is if you're looking at 5-minute or 15-minute or even a longer time frame, if you're going to get into a trade and stay in a trade, you can pretty much stay in it when the Trendillo it turns red. Stay in the short, as long as the other indicators are declining, like you see the stochastics going down, The squeeze momentum is losing the green, going into the red. You just stay in until you got the bottom of the red, and then you get out. So in this example, you could have gotten in, say, here. The Trendillo turned red, and then got out maybe here somewhere. It's almost 400 ticks.
Yeah.
A lot of money on a short. And the neat thing about traditional futures is, and this type of point system is, unlike crypto, the shorts pay exactly as much as the longs, point for point. So we have 397 ticks in that example. It's actually 400 to the bottom. So on the way up, it's the same. If you gain 400 ticks on the way up, you make just as much money on a long as you would doing 400 ticks to the bottom. Commission rate's the same. Payment per click. On the NASDAQ Mini, it's $5 a tick, or $5 a click, whatever you want to call it. In Forex, they call them pips, but
Yeah.
I mean, it pays the same. So the exchanges don't mess with you on the shorts as far as not giving you the full payout. So really, even though majority of traders prefer longs, in my opinion, I could be wrong, but when trading traditional markets, in futures, there's no reason not to go short. The price just isn't going to go up. I think that's the biggest fear. For the perma bulls, they think if they get into a short, the price is just going to go up. It's actually not true. If you use the right combination of indicators, you can find a really good short and then just stay in the short.
Yeah. And that really, I think that gives people a bit of confidence, because I think it's our nature to trade longs. It just is. I mean, I think it just makes sense.
You know why? Because we all came from a spot environment where you only make money when stuff goes up. If stuff goes down, well, you're sitting there underwater and, I'm losing like 30-40% in crypto, or 80%. And, it's kind of stressful because you're just sitting there in a longer term trade. And you're locked in now. You're stuck. So when you come from a spot trading environment, you naturally are into longs because that's all there is.
That's all there is.
Make money.
Yeah. And when you can trade up and down, when you can trade the long and the short, I think it gives people, at least myself, confidence, because I think a trader doesn't really care about it being a good or a bad market. Because if you can only long, there's a lot of days you're going to be out of the game, or a lot of time frames you're out of the game. So I think that I don't know, it just changes one's worldview. You don't really care if the market's going up or down, because you're making the same money. So you're not limited like in the spot market.
Exactly. Now I have a pop quiz for you, Craig.
Uh-oh.
Now you see how I've drawn this at a certain point to start the short, and at a certain point to exit the short. Can you tell me why?
Oh, why?
Why you would start your short here and then get out here?
Let's see here.
By looking at the chart.
Looking at it just like this. Well, I know the indicators below are turning down, but right here, I just see a moving average cross right
That's
there.
it. You're right. You got it. That's the reason.
Yeah, I'm not sure what those moving averages are. I think you mentioned it, but so we're on a 5-minute chart right now. And what are those moving averages?
This is the well, first of all, I had have the Madrid ribbon.
Yeah.
Powering this moving average, which is the 5 moving average. So it's a 5 SMA. That's my short moving average. And then the kind of olive colored one, that is the 10 SMA. So here you have the 5 crossing down over the 10. That's bearish. And it actually, if you notice on the 5-minute, which is a pretty darn good time frame for, shorter term trades. This isn't a super long time or anything. It's about, 2 hours. So it never crosses back. It tries to here, couldn't quite do it. but it finally crosses back bullish, and this is where you would exit if you're following that particular method. Now, it's not perfect. It doesn't catch the bottoms. It catches the place where you have opposite confirmation. So you have positive bearish confirmation up here. It doesn't catch the top for you, but it catches a good amount of the profit, and it's reliable because the moving averages in that whole period, they don't cross back over. You just stay in the trade.
And that's it's actually kind of an easy one to remember, because that is let's see, that's the 5-minute candle, and you're crossing the 5 and 10 SMAs.
Yeah, 5 and 10 SMAs. It's basically a cheat code. Is what it is, because it works really well on the 5-minute. Now, the reason it works here is because you have a definitive move. If you're in a choppy market like this, it's chopping up and down, you'd be getting in and out of trades. You'd probably be making a little, but you might break even or even lose a little. Like if you got in here and got out here, that's a slightly lower entry. You'd probably lose like, just a tiny bit. If you got in here and then got back out here, you'd gain. So in choppy markets, it really doesn't work too well. But if you wait for a definitive move, like, hey, this is going to dump because the other indicators say, Trendillo is turning on red. This is going down. This is going down. So you have a downtrend starting. So you can get in at that 5 and 10 bearish cross.
Yeah, and that's the thing is looking at the other indicators, like the Trendillo and squeeze indicator. Squeeze indicator to me is actually probably one of my favorite indicators on TradingView, because when you put it all together and it's right there in the chart in front of you, when you see those moving averages cross, or as they're getting ready to, then the indicators can certainly tell you what's going on, especially when like the stochastic crosses, or if you like the MACD, when it crosses, is it I call it like above or below the heartbeat? When your stochastic crosses and it's nice and deep, it's making that positive cross or that negative cross. It really backs up those moving averages. So, we have an incredible amount of visibility into what's going on. So yeah. I like that. And what's that one? So I see some kind of a moving average that is, I see it as red candles. It looks like it's above the 5 and the 10. It's the, or I'm not sure what moving or what that actually is. You've got
the red one. That's the 75.
And that's a 75. Okay, but like between the 10 and the 5 and the 75, there's a big, like, choppy red one, or am I just not seeing it right?
Well,
that thing, yeah.
You got the 5 and the 10. This is called the smoothed HA, and that's another free indicator, and it pretty much goes along with the 30 moving average. The little red dotted lines, that's the 20. So I kind of leave these like this just because it doesn't get in the way of my other moving averages or anything. Gosh. So I don't use the smoothed HA a lot, but it's interesting because just like the Madrid ribbons that turn red when it's going up, red when it's going down or green when it's going up, you have a situation here where you're in a downtrend and this thing just turns red. So when it turns on red and the bars start getting longer, you have more downward momentum. You could just use it to get into a trade. When it starts turning white or green like this, actually it's green in the center, white outline, you can just go long.
Yeah.
So I wouldn't recommend using that by itself with something like the NASDAQ. It's too volatile. You can ruin your account if you use one method like it's just too. This is like a medium term thing. So short, medium term, because we're on 5-minute candles. But the basic idea is when it's red or pink, whatever you see it is, as orange going down, it's in a downtrend, and then it turns greenish, it's in an uptrend. So it is kind of a neat thing to have, and it's not real intrusive or on your whole chart. It doesn't make it too messy. It just kind of adds to it, in my opinion.
Yeah. So
So
smooth HA. Okay.
smoothed HA.
Smooth HA. I like that.
Now this red line, this 75, I'm glad you mentioned that, because the 75 moving average is amazingly relevant in all trading on all time frames. I mean, you can literally watch the price reject the 75 when the market's still a little bit bearish. I mean, 5 minutes, a very widely used time frame. It just rejected it right to the tick. So on this wick here. So that's not by accident, that's by design. Because a lot of people use the 5 minute, and a lot of traders do use the 75, even though it's not talked about too much. It's just kind of a secret weapon.
Oh yeah, and that's 75 SMA.
Yep, they're all simple moving averages.
Yeah.
Call them SMAs, MAs. So they're not exponential or anything. They're just moving averages.
Yeah, because there are there's, I mostly use the SMA as well, because I mean there's an amazing amount of moving average types. I have no idea what most of them are, but they all have their place and things. Yeah, but the SMA to me, especially when you're trading shorter time frames, and even daily or 4 hour. I mean, and especially like the shorter the time frame, the candle. Yeah, the SMA to me, I like it best because it's not messing around with some weird algorithm.
Yeah, one of the things I always think about, and I think about this almost every day, is what do other traders see that are using these certain tools that are commonly used? So I'm a big believer that commonly used moving averages and even commonly used exponential moving averages, if other traders, retail traders, and market movers and whales are using these, then these are going to really count a lot more. Some of the more obscure moving average types might only be valid because they're kind of like witchcraft. Only a
Yeah.
select few know how to use it, or it just happens by accident, or I should say natural design, like the Fibonacci.
Yeah.
So basically, probably the best moving averages, in my opinion, are the 5, the 10, the 8, the 30, the 75, the 150, and the 200 and 300. I mean, that's a lot, but anything more than that, just for basic charting, probably isn't going to really be too spot on as far as validity.
Yeah.
But yeah, the 75 works great. And another thing you can do with the 75 is, if you're watching, say, a 5 minute, 10 minute, or even 30 minute, and especially with 30 minute, so let me go to 30 minute here, you can basically see how it respects this on the 30 minute here.
That's 75.
Yeah,
Oh
75
wow.
moving average. It's green here because you're in an uptrend still. So it respected this level of the 75 SMA on the 30 minute. You could basically have just went long at that bounce. Now that's a clean reversal to me, because you have two candle bodies that are, this one's red and this one's green. You can't see it because I have different things influencing the colors of my chart. I need to kind of get that fixed. But you have a red candle here and a green candle here. The candle body bottoms are the same. That's a clean reversal right there. Plus you got to bounce off the 75.
Perfect.
So this was on Thursday, yesterday, happened at 9:30 a.m. Reversal. Boom. All the way up. Now, if you happen to get in there, which by the way I did not, Could have captured quite a bit until the close. About 520 ticks.
Yeah.
Something like that. 500. So nice big trade. I'm looking forward to the day when we can actually hold our futures positions overnight. I don't know if that'll actually ever happen. It's kind of unclear, but since the market does technically close 1 hour a day, the platform that I trade on, they close 2 hours a day. So we have to have our trades flat by 3 p.m. Central. And most other traders can trade beyond that, or some have to be flat an hour later.
And if you don't close your position, it just closes automatically, right?
They'll flatten it for you, which means it'll just close automatically.
It'll close, yeah.
No extra loss, just mark it out.
That makes sense. Well, the 75, simple moving average, that really is on the half-hour chart. That really is a powerful moving average, for sure. And then also, that's one thing. 5-minute can be a little rough for people, but if you want to go 30-minute, the thing about that is your indicators like the Trendlio, the squeeze indicator, the stochastic, all those are, I would say, going to be maybe easier to read. They're a little smoother. You're getting rid of a lot of the chop. I mean, 30 minutes seems like a nice place where you're not going to be, so choppy as those shorter time frames if you're not used to dealing with that.
Yes, that's right. You're absolutely correct, Craig. One thing I did want to point out real quick is even on the 5-minute, look how the price it rejected the 75 perfectly on this wick. Now, I don't think that's a coincidence. I think it's how it works.
And that's the thing, like you're saying. I like them. I like the indicators and moving averages, even shapes. I don't do a lot of shapes, as far as like descending wedges and things like that. Things like that. I just don't, like bull flags and pennants. I note it if I see it, but I've never really been too much of a shape trader. But all those very common things, whether it's coincidence or deliberate, it doesn't really matter. The market really sticks to it. And I also one that I'm not sure if it really come into play here, but it's just Fibonacci sequences. Especially if you zoom out to the 30 or 4 hour or something, or daily. I find that not everything, but some things really, really stick to the Fibonacci sequences. And that helps me decide if I want to go long or short on things quite a lot. It's just zooming out to a larger Fib sequence and seeing where it is in there. But that's...
Yeah, Fibonacci works great because I was looking at a chart on the NQ yesterday and using the Fibonacci, and I looked at it and I thought, man, this looks like a 786 bounce. And I pulled the chart and it was right on the 786.
Yeah.
After a while, your eyes just kind of see those things, but
after a while,
it's not because of genius level or anything. It's because of experience.
Yeah, after a while, you don't need the. It's kind of funny. After a while, you don't need the indicator anymore. You can just see the Fibonacci sequence.
Now there's a Fibonacci, like a little Fibonacci calculator. That instead of having to draw the line, if you're lazy, you can just pop this little chart in the middle of your screen and punch in the numbers, and it will tell you, where the levels are. I've seen that used as well. I don't have it to show you, but it's pretty interesting.
Yeah, and there is one right there in TradingView if anybody wants to look at it. It's there, but I didn't know there was an indicator like that that you mentioned. But yeah, the market, like our reality, works around the Fibonacci sequence.
Yeah, it absolutely does. Fibonacci I did a YouTube video on it. If anybody is listening and is interested in the Fibonacci sequence, I did a whole video just based on Fibonacci on YouTube. This is probably about, it might have been a year and a half ago, or could have even been 2 years because time goes by quickly. Now, one thing I'm looking at right now on the NASDAQ is there's kind of a breakout area, and it was trying to break out there, but liquidity is thin. And I can tell by the way the candles are acting that the liquidity is just not there. The reason is it's still pre-market for another 6 minutes. It just kind of rejected that area and then went down, because I was considering a long, and I thought, if this just blasts off here, I'm just going to go long. But see, it's just thin. You get these quick, funny price movements.
We have like 5 minutes of the market open, I think. So now is when you start to see things get a little crazy. And so, like for a NASDAQ trade right now, I just see it as a bit indecisive. It needs to dump or break out.
Yeah, you're right. What I was looking at is on the 15-minute. Well, let's go to 30-minute. It's probably going to be a little bit easier to understand. You kind of have this rounded formation. I mean, it went up like crazy on Wednesday. Now this happened because there was some type of I think it was CPI data came out at 7:30 a.m. Central Time, and the market was just ready to erupt. I think it actually front ran it by a minute or two, and it went up by I don't know how many hundreds of dollars. So basically, we're looking at 278, and it went up in all the way to, see, in that one candle, one 30-minute candle, it reached 458. So almost $200 there, $180. It went up, and then it went down a bit and went up again. So this was all done Wednesday. It just kind of took off. Now, if you look at the bigger picture, we have this kind of rounded top here. And sure, you can easily trade these. I call them relief rallies because in the bigger sense, they're just kind of a relief in the bigger. I think it's going to be a bigger downtrend. But everything gets oversold and it has to come back up. Just like when things are overbought, they have to come down. So yeah. I'm expecting a day, maybe not quite as good as yesterday. Yesterday was a fairly good day for trading. But I do think the market is going to have a small rally and probably could end up in the 600, the low 600s again, before kind of rolling over and continuing this downtrend. I could be wrong. I mean, it could just, I mean, we do have a support level in here, right here.
Oh, yeah. You can see that.
There's support. It could just actually bounce off this and make higher highs and go to 20,000. So it's kind of hard to say because this is a big asset that is controlled by, what these other things are doing. Nvidia's, Apple. Microsoft. GameStop, about the kitty thing and all that.
Oh, GameStop's doing pretty good.
Yeah, big influencer on the GME. So it's my opinion that this person has gotten real popular, and they basically use their influence to dump the market, and where they can short, and then once it's done dumping, they can go long and capture a nice profit there as well. So I really don't have anything more to say about that, except influencers who cause market dumps, they always have a reason for doing what they do, besides being popular, which is a lot of fun and has great benefits. But
yeah, it's all about the great advantage is if you know the influencer and you know what they're going to do tomorrow, then
if you've got 10 million followers, you become a market mover, sure.
Yeah,
and you can add some, they could throw in some technical reasons why it's going to dump, and then everybody goes, well, we better all go short then. Let's follow the masses.
Yeah.
It's funny. I find it comical.
Yeah. Well, it's like somebody, like you mentioned, the NASDAQ ran about a minute before the CPI numbers, I think it was. Well, there's certain people who knew about who got their trades in that minute, I'm sure, Yeah, it can make a big difference. Uh, it's going to be on the right A list, I guess you could say. So we're just about to open, I think, and it still looks at 629. It still looks pretty indecisive. It bounced off a pretty good support. It's like the third test, I guess you could say, of that support, and it looks like it's successful, at least bounced to that spot. But then bounced from there. But we also have you're right. There's not a lot of liquidity right now. That we're not seeing a lot of volume, and we're right there on that. This is the thing I find to be a hard spot is when you're riding a moving average like that. So it's really kind of that's the 75, right? That it's actually like kind of flirting with there.
Yeah,
So
on the
it didn't exactly find support on that and bounce.
yeah, see, the New York just opened, and now it has just
Yeah,
broke the 75 on the 5 minute. So I
there
think
we
we're
go.
off and running now. There's going to be a little bit of fighting in here, but yeah, I think we're off and running as
And
far as longs.
you can see that volume that just came in.
Yeah, the big volume bar there, bigger than
I
kind of
think
dwarfing all the rest, the prior ones. So yeah,
think
this is
yeah. Stochastic just turned positive. Squeeze indicators going green. Um,
yep.
Trendlio is doing its thing. I don't know. I don't know that. You have a cool indicator at the very bottom. I'm not sure if that's one of the free ones out there or not. The whole
It
bull.
is. It's called the
Really
easy entry. Easy entry,
the
easy
entry.
exit with trend colors.
Yeah.
So let's see here. It's called easy entry / exit trend colors parentheses with alerts.
Mm.
So this is a different version of the MACD,
Okay.
and it basically gives you a diamond green bull signal when it turns on bullish, and then you have little triangular green when it's going up and triangular down pointing down red when it's going down. So basically, I think what it does here is when it's ready to do a reversal to the upside, you get a green diamond.
Yeah.
And
Easy
then
entry, exit, trend
easy
colors.
entry. Yeah, it's just a different version of the MACD.
And that's cool because the MACD can use a little upgrading.
Yeah, the MACD is pretty simple, although, man, when I started using the MACD, that was also a game changer for me because it just really kind of either is going to tell you really what's going on in the market, or it's going to complement and confirm your other indicators. See, now we have kind of a pump and dump
Oh,
situation here.
yep.
That's
That's
why I
that's
didn't get in. This is just too much to
that's almost to be expected,
it's too much to weather. So
Yeah.
usually what they do when they dump the market like this, they're dumping the market to create more upside.
Mm-hmm.
So
Yeah, and I'll link to all these indicators. I'll put it in the probably not. Well, maybe I'll put it as a comment later, but I'll stick these over at the bitcoindailyview.com site, and then I'll also I'll put it in the I'll start putting it in the descriptions of these. I'll just note the indicators that we use. Um,
sure.
yeah, and it's one thing if people are trading, in TradingView, to use this many indicators, you usually have to have, I think, at least like the mid range account. But a little tip is you can always wait till I think it's Black Friday. Is that when it is?
Yeah,
And
what they do is they do a Black Friday sale right
that's what
around
yeah.
Thanksgiving, and but another thing that TradingView does is if you're on a monthly and you actually let your membership expire, they will usually send you a 60% off offer where you can
Mm,
get in, lock the price in at 50% or 60% and do monthly or yearly. I think it's a pretty good deal. I'm doing monthly at $69 a month, and then I pay the extra $7 for CME data. And yeah, this thing is just This thing is really getting bullish now. I'm kind of liking this. Look at that big volume bar.
Yeah, and that volume indicator, I think that one is there's that one, and then there's one that I'd have to look it up, but there's the volume indicator like at the bottom there that doesn't show necessarily just buy or sell, but it shows the combined. So it gives you I use that one, but I forget what it's called. I'm sure you probably know which one that is.
I know exactly what you're talking about, Craig, and I have it on my experimental layout chart.
Oh, okay.
Sorry. Open a new tab and immediately alerts start going off. So this one is called Candles by Sam.
Oh, yeah, Candles by Sam is awesome. Yeah,
That's not the one though. Candles are actually in the chart. This one is called.
I could look it up too.
Let's
Let's
see.
see.
I wonder if I even still have it.
And Candles by Sam's actually pretty cool too. 3 consecutive candle bodies stacking will turn, I think, purple when it's positive, and then yellow when it's negative. And it's actually it's not a bad indicator.
Yeah, that's correct. Yeah, that's a good one there. But yeah, you're right. I cannot remember the name of that one that Jonathan uses.
I'll look for it real quick.
I
I know.
think it's called Real Volume, something like that. If we look it up, it's going to say, I think it's going to say Real Volume. I think that's what it's under.
Let's see, where do I have that? I have it here. Volume analysis is what it's called. I will. I'll link to that one too. I need to upgrade. I need to make a note of that, and so we'll be able to link to the indicators in the future. It'll all be just in the show description what we're using, because I know when you're watching and you're playing along, it can be hard to find the indicators.
Yeah, absolutely. You're right. This looks really bullish to me.
That is really bullish. So it looks like, at least for the moment, the NASDAQ is looking pretty good there on the 5-minute chart. But that was the thing, kind of had to wait. It was one of those hard, mornings or hard trades where it needs to break up or down. You just don't really know for sure, But
Right.
this is definitely, I'd say, for now, an upwards break.
Yeah, I went ahead and went long. Probably going to take a little bit of heat here because I kind of chased on that one a bit.
Oh, yeah. It could revisit that moving average before it continues going up. 75 again.
Yeah.
But it looks good.
It moves quick. That's a big drawdown. I'm not going to do that. In fact, I'm not going to set a stop loss at all.
Well, now that the market's open and we see which way things are going, we've been going for about 53 minutes, and so I got to start getting ready for the day job. But we got our trade in. We're long.
Yeah. Yeah, at least we did a live trade, right?
Yeah, we got it. We're live. And what I'm planning on doing is, so Monday's a tough day, but Tuesday I'll have my big computer. I'll be upstairs. I'll have this laptop kind of over to the side looking at me, and we'll kind of, we'll both be able to share screens a little easier. And I will get I've done it before. I'll just upgrade my StreamYard, pick up extra dollars a month, and we can do the webinar feature. So if others want to hop on, they can do so. It's the webinar works really well on StreamYard. So because this version, which is what I use like 99% of the time, it only works with 2 people, but the webinar one, it's excellent. So
Yeah.
we'll be set,
Well, that was just a scalp. It was like 220, so a little bit risky, but I knew it was going to do something. So
Well, looks like
Could have gotten more out of it, but
it looks like it might continue. Look at that.
yeah. Already it's a $600 trade. Would have been.
Oh my gosh, that's really
Woulda,
good.
coulda, shoulda, you know. But
Well,
I figured the downside risk is just too great.
oh, it definitely is. I think
Way too.
after it retraces from here, unless you want to kind of short it, but if it retraces here and then continues moving up, I'll have a little bit more, confidence. But we'll see what it does today. So
Yeah, the
yeah,
Trendillo is turned on pretty well.
hmm,
So 3-minute Trendillo, already green. I think it's got a pretty nice upside. It'll probably go to at least 613s, 612s before it retraces. I mean, the stochastic's not even at the top yet. Yeah, this is this is a hot trade.
ooh, there he goes.
Yeah, temporary stuff. The only reason it's doing this is because it's overbought on probably the 30-second. Yep, see, trying to roll over on the 30-second. Hopefully my friend made some money on this trade. He just passed his combine. Yep, it is rolling a bit. True.
Well, it did hit it did hit that trend line above there.
On which time frame?
Well, there's that indicator that you're using
Oh,
the
trend lines with breaks.
trend lines with breaks. Yeah, so it actually hit that trend line right there on the 5-minute. So
Yeah,
it's one of the things that people will notice as they go along. I mean, if you look at
sure did.
this chart, it wicked down to that trend line not long ago, and now it just actually hit it. And look at that; it's as if it's a wall. Those trend lines are amazing. I think
It
that
is a wall.
yeah, I think that upwards and downwards channels to me are some of the most effective things you can do in a chart to see what's going to happen, and especially breaking above or below a trend line or an upwards downwards channel. But this indicator, I'll definitely check this one out. That was called trend lines with breaks, because that something that just auto does trend lines. I'm not sure what it's basing it on. I can see it's just figuring it out, but they're close enough. I mean, it looks those trend lines are pretty darn cool how it's laying those out, and we can see that they're quite sticky. They really do work in the chart, so that's good
They sure
stuff.
do. Yep, they sure do work. Now
Yeah.
keep in mind that this upper green line was not created until this candle happened.
Hmm.
So when that candle happened, boom, there's the directional diagonal trend line. So before this candle was a thing, there would be no reference on the top. But
Yeah.
suddenly there is, and now you have a range, a widening range, that if you break above it again, it's just going to go up.
Yeah.
I mean, I'm not saying it's going to continue to go up, of course, but probably going to have a nice little breakout once it does make a higher high there. But like I mentioned, it is pretty well overbought on the 30-second. It's kind of rolling over. It's 30-second is just leaving Trendillo green. So, I mean, you can scalp the NASDAQ on 30-second candles pretty effectively as long as you follow the other indicators. And if they're all in agreement, I mean, there's hardly any way to lose. Like I said earlier, the biggest way to lose is by bailing out of trades that you have not set a stop loss on or a take profit, especially the take profit can hit so quick.
Mm-hmm.
Once once you set your take profit and you just know the price is going to go there, just leave it. If you think the price is faltering, if it just acts funny, move it down and take less profit. Take the $200 instead of going for the $500 is what I'm saying. But if you're in a situation where it's really bullish, just stay with your first decision. Take the bigger profit, and You can will it to go up there.
You can.
Like a video I posted last night. How to make candles go up.
Oh,
Sit there by the chart and
oh, that's
blow
so
on it
great. Yeah.
to go up.
Yeah. No,
It's
it's
amazing.
true. Yeah.
It's
Or
so-
if you have 10 million followers on YouTube, you can.
yeah, exactly.
Yeah. Oh goodness. Well,
You got to go long here, you guys, because and then you go long, or you're already long.
yeah. It looks like it might be going. It like it might actually get above that trend line there. That'd be interesting today. Well,
Yeah.
I got to get going, but what I'll do is I'll get an invite out for I'll schedule the YouTube for like Tuesday morning, and we'll see exactly what time we want to schedule that for, so that way people can click notify. But I'll get that out. We'll just figure when exactly what time we want to do it, and if Tuesday works, and we'll kind of get these on a regular schedule, and
All right.
and this will be good stuff. All right, everybody.
Good.
Talk to you soon.
All right. Take care, Craig.
Bye bye.
Thanks again. Bye.
Thank you.